Hey everybody, welcome to the show. Let's see, we got Rob, Mark, Gaten, Eric, Donald, Goose, Lieutenant Colonel, good to see you as always. Rex, Francois, Stephen, Wade, Don, Dube, Arturo, Rosalind, Craig, Indy, Doris, Stan, Larry, General Rush, Svenborn, Peter. Welcome everybody. Even Sledge here, Darren, Anthony, David, RP, Maurizio, Carmen, Laura, Carlene, Joseph, Roland, Jason, Jesse, Cliff. Good morning, everybody. And if I skipped your name, I'm sorry. I was kind of scrolling through. And welcome to the show. Welcome to the show. Now, reminder, 5 p.m. today. 5 p.m. We have 30 minutes of awesome. Make sure that you set your alarm. That's 5 p.m. Eastern, by the way, not 5 p.m. wherever you are. 5 p.m. Eastern time. I will be live going through the markets, and then I will take requests for at least 30 minutes. I got a little fly in here. He already tried to go up my nose once. I killed 3 of them yesterday. Anyway, I don't know where they're coming from. There is no food in here. I mean, I don't think they drink Monster. So, anyway, welcome to the show. And, you know, if you want to chat with me on the stream while I'm live, all you gotta do is be a subscriber right down at the bottom. Just click subscribe, or right over here, the little green button with my logo. Be a subscriber, and you can chat on the stream. Wrong number. Good morning, good morning, good morning. And let's see, flip this over. My screen thinger working. There we go. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't trade them. All right. That's stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them. Don't trade them. All right. That pretty much covers the gamut. Right. If you don't know what you're doing, you don't have an edge. Don't trade. And don't buy stuff from gurus. Like, I may be completely full of crap. All right. Make sure you trust me before you buy. If you and me don't G and ha, then you may not appreciate my work. All right. I try to produce something for all traders, but all traders don't necessarily like the way I run my business here. So if you desire personal financial advice, that's not what I'm doing. I'm not telling you how to trade. I'm not trying to teach you. I'm not really that great at beginner stuff. I do my best. I'm trying to get better at that. I started, when I was 8 years old. I started chasing the market when I was like 8 years old. I don't remember starting. I don't really. I mean, I kind of remember the origin story, but I don't really remember all the little things along the way. It's been a long adventure, and I don't profess to be great at teaching noobs how to do this. All right, that seems to be my kryptonite, is new people. They don't necessarily get up to speed very quickly, and they get frustrated with me. Sorry. I'm kind of like, I had an intern that started with me back in like February, and he lasted like 6 weeks, and then was like, you're just so far down the road, I can't keep up, and I don't think I like the stock market. It's like a twofer, and it's I learned a lot by his questions, because I just don't remember being new. I'm sorry. So anyway, we have consumer confidence. If the market seems kind of dull, well, we'll get some information here at 10 a.m. today that might spice things up a little bit. And then Wednesday looks kind of boring. Maybe some crude oil. Yeah. Thursday though, preliminary GDP. Right there, 8:30 before the market opens. So Thursday should be a little more spicy. And then Friday, we get Powell's favorite number. Powell's favorite number right there, that PCE. My little highlight scrolled off the screen. So there you go. Dun-dun, dun-dun. We'll see what happens later in the week. And I hear NVIDIA earnings coming up this week too. NVIDIA. Yeah, Wednesday evening. So we'll talk about that more, I guess, in 30 minutes of awesome. We can talk about it more tomorrow morning. Look at where we stopped. We can talk about some right now. Look at where we stopped. This is interesting. We kind of filled that gap, and then stopped just above the gap fill. Below this high. So this is, I mean, depending on, I went through the patterns I followed yesterday. I can cover that really quickly if there's demand. Anybody not understand my patterns, I'll go over them one more time, 30-second view or 5-minute view, whatever. But basically, two patterns. One of these, my primary pattern, the one that works out more often than not, the high probability pattern, is this retrace to the roadmap line. This works on all time frames, and I tend to watch it on a daily just to get a good feel of where things are going. Like NVIDIA here, bounced. Just the naive condition, we're looking for 150 right there. There's the target. Now, messing around here could fail. If it fails, that's where we're going. A bigger downside. That's like 75. That's 50% difference there. Ugh. Yeesh. So that's the upside. That's the downside. Bigger downside. And a couple of people keep calling me a perma bear outside of Discord. I find it funny. I like to think I'm more perma contrarian. Like wherever everybody's tipping the boat, I'm usually the opposite. So I don't feel like I've been bearish ever since the bottom. Now I do say be careful, because there's always the chance that the market rips you. I see a lot of optimism sometimes, and doing what I do, it's really tough when you watch people take losses. It can be really tough. I'd say I'm probably 75% long in my account right now. I mean, like I don't have very much. Yeah, perma cautious. Yeah, that's what I would say too. I don't have. I don't really have any bearish positions. I don't think I have anything that'll make money if the market drops. So, yeah, big difference between cautious and bearish. I agree, Goose. Goose, I mean, you talk to me all the time. Would you say I'm perma bear? Would you say I'm bearish most of the time at all? I mean, I'm usually pretty optimistic, looking for the upside. Anyway. All right. Now, I was pretty, over here, FOMC meeting, I got really serious about a drop, and we had a drop, and people lost money. And I felt really bad that maybe I didn't warn everybody enough that was coming. But then we ripped it right back. I mean, look how fast we ripped it right back up to the top. Now, I was really cautious in this zone till we got through. Now we're just sitting on top of the danger zone, which is interesting. I still expect 5,800. I mean, that's bullish, right? That's bullish. How you can say I'm bearish if I'm looking for 5,800 on S&P? This is, if you're unfamiliar, this is ES. This is S&P 500 futures. How does the mainstream media know how the market's doing before it even opens? Futures. All right. Anybody that has been around the stock market for a long time probably spent at least a little time watching some futures. This kind of fills in the price action. We don't really ever stop. I mean, we stop on Saturdays, but it opens on Sunday. It goes till Friday late. We're closed Friday late through Sunday. I mean, we basically take Saturday off every week. Otherwise, it's open. And even if you hang around me in real life, come 6 p.m., you hear my alarm go off, and you're like, what is that? And it's like, market's open. The market opened back up. It restarts at 6 p.m. Futures do a restart at 6 p.m. every day. And a lot of times I'll check in on it. So right here, this is kind of interesting. Maybe you don't see what I see at this moment, and it looks kind of like a heartbeat, EKG or something like that. So what we had, let's just kind of outline this. We had this decline right here, that move, all right? Now we also had this move up. We had this retrace, and we had this move up. That was a higher high. That doesn't really break down into anything awesome. That's very clearly a three-wave type move, very balanced. We use my Fibba tool, Fibatula. Not even to the 100%. So, but this move and that move look very similar. Kind of topped out, very similar. This is all corrective. All right, that's the bottom line here. Now we did a move down yesterday that looked like kind of like 5 down. This looks kind of like 3 up. We've got a 1, 2 so far. This could be a 3 and a 4 and a 5. So we could get a little deeper retrace here. We could get a little deeper retrace. Now, let's just clear a few things off and get where we can draw some fibs. Just draw it a little, clean it up here. You see it a little clearer there. That move down, 1, 2, 3, and so far. So far what we got. So if we start here, and go here, well, that could bottom in the same vicinity that we bottomed out originally. Or we could extend it 55.60, possibly 55.30. So here's the levels to be watching on the downside for a bounce. Am I a little bearish looking right now? Yeah, because the market's in a correction, at least in the small time frame here. These are going to be where we probably go down and retest one of these levels right here, right here, right here. This is just what it looks like so far. All right. Can change on a dime. Change on a dime. Now, once we do that, we're probably ripping right up here to 58. We're probably going to go right here. If we bounce right up here, it's going to be like a 300-point rip pretty quickly, 250-point rip. So I would watch out for that right there. Now the cash index, you may be like, well, cash looking a little different. Yeah, it does, because it stops trading at 4 p.m. and we have gaps all over the place. This is why I don't particularly care to look at this chart and do it that way. And there we're just restarted. We may go down here and hit the 30-minute roadmap line right there. May fully retrace that. Could be the, look at all those alerts kicking off. If you're in triple threat, you probably just saw a flood of alerts. See, that would be right to the 1272. First move down, 3-wave up. Next move down, right to the 1272, 55.50 on the S&P. And I kind of said we may go retest the top and then fully retrace back in there. And then we go to the moon. That's what I got right now. If we break down below, so S&P cash index may be a little more clear than the futures at the moment. So big, I guess, big level to watch if we get down to this 55.50 area. If indeed we get down there, watch for support and the rip. Or if we start pushing lower, I don't know. I don't know. Chris made it 2 days in a row. Well, I'm so glad to see you. So glad you can make it. Alrighty. And let's see. Let's check in. Let's see. Check in on this. See what's cooking today. And closing out a couple losers. Market pullback. Dun, dun, dun. Awesome. Love it when you sell a new product and book a couple losers right off the top. That's just the market. The market for you. All right. So that's probably going to pull back. That's S&P for you. Now, S5TW. Stock's above their 20-day. Dun, 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 dun. Look at that. We're up at the top again. Higher than we've been all year, basically. That's a caution. That's a warning light. I'm not trying to be bearish, but that's a warning light. All right. 89% of the S&P 500 stocks are above their 20-day moving average. That's what that says right now. Basically 90%. We can't go over 100. And it doesn't hang out here very long. Like, look at the history. Like, it doesn't stay at the top. All right, it just doesn't. Like, that's, sorry, dose of reality. We just don't stay at the top. I'm not trying to be bearish. We just don't stay up here. Occasionally we get right up to 100 and then we go down. That's just the market moves money. Moves in, moves out. That's a warning. Warning number one. Warning number two. This one poked above. It did poke above 80 yesterday. Pulled back a little bit, got the close below. Warning number two. This is stocks above their 50-day moving average. This one still making a lower high. We may be waiting on this one. Stocks above their 200-day moving average. Right? Why do I watch these? These are very common for algorithms to trade off of. The 20-day, the 50-day, the 200-day. Now, I'm not so caught up in my own Fibonacci analysis stuff that I don't look at other things. All right? Like, there's no one thing that works all the time. This is something I keep an eye on. When everything's maxed out at the top, remember that contrarian thing, right? When everything's maxed out at the top, which way can we go? Which way is nobody trading for? Now, I kind of teased about the Fed put, right? I didn't start talking about that off the top, but here we go. Here we go. Check this out. I was talking about yesterday how the S&P wasn't really pricing in a move down. A 0% chance of recession. Check this out. The market basically still long at the money volatility, short some out of the money puts, but dealers are increasingly short upside. This is interesting. Again, for the first time in a long while. So dealers, we're talking about market makers, short upside, as customers, that's traders, me and you, are hedging upside breakout. That means we're buying a lot of calls, out of the money upside calls. As this rally is approaching escape velocity, that means new all-time highs. All right, when you see something like this, and you're like, what does that mean? I'm kind of interpreting it as I go here. All right, we're seeing dealers get a lot of negative gamma. All right, this is SPX aggregate dealer gamma out 6 months. And this was done Friday. Yeah, done Friday right there. This is what it meant. Like, Powell put a Fed put on the market. So the market all of a sudden said we're probably not going down. Pricing it out. Now, fear of the right tail. SPX call skew steepening. This is interesting too. So we're seeing a call skew forming. Upside potential. Remember, people like you and me buying upside calls. Right there's a call skew steepening. What does that mean? It's curious. Curious. So here's how we've run all year. Way up here. Flushed it out. It's one of those things. The market was increasingly not looking for upside. Now we're starting to look for upside again. This is indicating that we may do another rip to all-time highs. Bullish. Bullish is what that means. We may stretch all these indicators even more than they've been stretched. That's what that means. And then here's the 1 month versus 3 month realized volatility. It spiked to crazy levels that we haven't seen in like a year, and we're due for a pullback. Due for a pullback. So, yeah, I mean, it could be a retail short squeeze, but it could be, it could be a dealer short squeeze. I mean, that's, gotta be careful. Still long at the money vol and short some out of the money puts. So those are short puts. That means upside potential here. Could rip people to the downside, but it's also hedging to the upside. I mean, dealers being short upside. This could play out interesting right here. A breakout could be very, very interesting. I think that's why we're seeing the muted breakout. Like we didn't just rip. We didn't just rip. That's why we had this. That's why we've kind of stopped right here. We can flip the dealers long, gamma. They'll trade with us. Go to the moon, baby. Go to the moon. Go to the moon. Anyway, I expect us to go higher, and I'll give my expectation at the end. I do have a bonus trade coming up at the end. Bonus trade. Whoop, that's crazy. Bonus trade. Make sure you stick around at the end. We'll check that out. All right. So there's S&P for you. Kind of expecting a little, maybe a little lower than we got right back here on Thursday last week. Little push and flush. Now we do have that news coming out. Dun-dun-dun, dun-dun-dun, dun-dun-dun. Got that consumer confidence hitting at 10 a.m. So it's coming up in 20 minutes. 22 minutes. And in Q. Now, jumping around. Look at that. Rejected the 15-minute. Roadmap line. Heading on down. And when we look at the bigger picture, it's a little different than S&P. That, look, 5-way down. That 3-wave up, but it didn't, the last move didn't complete a higher high. So this went up, and this was part of the next move down. Right there. This is a different chart than S&P, and we may be indicating that we're almost done. This 19.4 area right here, possibly 19.3. So we're within maybe, I don't know, 100 to 200 points of wrapping up this correction in Q potentially. These are the levels to watch right in here, 19.3, 19.4. If we can hold those, start going higher, make a higher high, make a higher high, make a higher high, make a higher high. We're probably on escape velocity. We're probably going to make a higher high, higher all-time high on NASDAQ. QQQ, NQ, NDX, TQQQ, you name it. That's what this is setting up for. We wrap this baby up right here. Launch off. Now, if you, my chart of the day, the bonus trade from a few days back, this is still valid. All right. A little bit of pullback. Don't always happen. We got the entry, pulling back a little bit. If you didn't go full boat, or if you skipped it, we may return back to the roadmap line here. This is very common. We see this happen. It's not high probability or anything like that. It's not something you can count on happening. It's very common, but it's not like every time. So this may return here and then do that. All right, that gives you opportunity to get in a lower cost than right here. Maybe if you didn't go full, you could add something. I'm not saying you should add something. I'm saying if you went in super light, the opportunity to add something could be right there. Now, the alternative is this just fails. It's one of the losers, and we just drop the fudge out and make a lower low. Remember, the stop was $1 below this low right there. So down at 48-ish. Right there. All right. Hey, Kimberly's here. Dun-dun-dun. The boss. Dun-dun-dun. My favorite subscriber. Good to see him. Good to see you this morning. My favorite person. All right. There you go. That's, if you missed this from last week, you're like, what are you even talking about? Look right there. That's the, right there. 94%, 24 profit factor. That's why I was interested in this one right here. See these numbers right here? Dun-dun-dun. That's the win rate when this kicks off. And that's the profit factor right there. Those are ridiculous numbers. Ridiculous numbers. So this has a high probability of making that purple line target up there. Where is it? 90. Going from 67 to 90. That's pretty crazy. This is ultra. This is leveraged. Be careful on leverage. Leverage stuff can and may lose you money. Leverage cuts both ways. Russell, look at that. Fired off the entry yesterday. We may, in fact, the statistics kind of say that we may, in fact, go cruising right up here to the target zone. Target zone, target zone. Look at that. 88, almost 90% likely. Oh, drawing through the numbers. Reset. There we go. Almost 90% likely. Profit factor 6. And that's on futures. That's ridiculous. That's ridiculous. Talk about a profitable futures trade right there. This may play out right there. It played out right back here. And we topped out right there and went down. Now we're here again with the potential for that move right there. That's not bearish. It's funny. If I'm a perma bear, why is my primary strategy long only? Apollo's long only. Triple the traders long only. You tell me, like, that just doesn't make any sense, right? Doesn't make any sense. Why somebody would say I was a perma bear and my primary strategy is long only. That's just like the most ridiculous statement ever. And CL stuck in the wedge, stuck in the watermelon seed squeeze right there. Yeah, I look for the bearish stuff to get the bullish entry. I look for that downside. I guess that's maybe why it seems like I'm a perma bear. I'm always looking for the downside support so I can get long. maybe that's why it seems like I'm always perma bear. I'm always looking for that pullback so I can get in and chase the long, and then I get out. I just get my piece and move on. I don't stay long. So CL stuck in the watermelon seed squeeze. We have this accelerated downtrend of highs. There's the resistance right up there. Here's support down here. Bigger breakouts, potentially down to 48 and up to 120. And we're just hanging right in the middle. Right in the middle. And yeah, maybe they meant teddy bear. Yeah. Nah, I very clearly read what the person said. And it was perma bear. And GC hovering. Man, talk about bullshit. Complete bullshit yesterday. By the time I got off of here, the gold rush trade gone against me with that pullback in the market. I was a little bit miffed at the market there on gold yesterday. I need to turn off this. This thing's being a distraction. Yesterday morning, right at 9. Look at that. We had this opportunity. Those of you that got out, good job. If you got in at the lower prices, you made money. If you got in at the original entry, just a small loss. And then it did this bull crap thing where it dropped and then it continued to drop. And we got more drop overnight. And what the fudge is going on here? What the fudge? What the fudge? And yeah. I think this is just a consolidation before we break out again, but that's a lower high. Caution. I mean, that perma caution, right? Perma caution. This did something. Got a wild hair and did something different. We didn't come down to support yet. That support still hanging out down here. Can we turn it and burn it, or are we gonna break down and go on down, possibly to the daily roadmap line, which is way the fudge, way down there. Way down there. And we're hanging out down here at 2,300 right now. I think 26 is more likely than 23. But maybe I'm just overly optimistic. That's the perma bear, I mean, right? 26 over 23. So, anyway. Yeah, sorry about that. Monster, high in the percent profitable. It was... Turn it back on. Oh, wrong one. Wrong thing. keep turning on the wrong one. There it is. There you go. Pull it up above the monster can. 89, 88, 89 right there. Whoop. Profit factor 6. There you go. Recycled. All right. It's 90% basically. And Bitcoin. Pulling back. Probably going to retest the roadmap line again. Come on, Bitcoin. Come on. Come on. See what we're doing on the daily chart, on the actual spot market. Probably going to retest. Need to hold. Need to hold. Right there. Need to hold. All right, Ethereum still looking bearish. Doesn't even matter if you look at the spot or not. This might go lower. Be careful. Also, Matic. It's going to change. They're going to roll this into something called POL. They're going to change it. I don't know. It's a 1-for-1 conversion. I guess can't do whatever on the contract that they've got. So that's coming up. I saw a notice from Coinbase that over the coming 2 weeks, they're going to be converting that all over to POL. DXY. That supports. Next support down, 99. Then mid-90s below that. I've been expecting that for like 2 years. NKD is just hanging just above the roadmap line. Can't, hasn't even tested into that resistance. Just hanging here, building up energy. Reminds me a lot of Bitcoin's chart right there. We may go popping off. All right, we are above. This one, not as likely. Right there, only 67% likely to go make a new high. Up there, that leaves 40 whatever percent likely we burn it down. 30, I guess 30, excuse me, 30, 32% likely we're gonna burn it down. So flip a coin, pop up, burn down. Why am I watching NKD? That's Japanese stock market right there. Widely kind of, I guess, people latched on the fact the carry trade was blown out, especially on Twitter. I mean, that was lit up Twitter. And so carry trade continues. Like, I guess the big risk in the market, suppose Jerome Powell cuts rates in September. Maybe that's the policy change. All right. He didn't actually say he was cutting rates. He just said time for a policy change. And so what if he cuts rates and the carry trade just absolutely starts blowing out and it's just wrecked? All right. Japan is the biggest buyer of U.S. debt right now. It's the biggest customer. People blah, blah, blah. China was bigger. China hadn't been buying squat. It's Japan right now. People borrow yen, convert it to dollars, go buy U.S. debt, make the spread, use that as collateral, buy more yen or borrow more yen with their collateral, convert it to dollars, buy more debt, and it just keeps winding. Like, this is the leverage, right? It keeps cranking and cranking, and you make money on the spread. We're just talking a little bit of money, but on the spread, but we're talking trillions of dollars. All right, especially $1 trillion every 100 days of debt we have to sell. Now, if they blow out the carry trade, Japan has to raise rates, the market has to cut rates. Over here, the U.S. cuts rates, Japan raises rates. All of a sudden, the spread's gone. Trade blows up. Who buys U.S. debt? What happens? Does the house of cards unravel? That's a big question, right? Big question. House of cards may unravel. So that's why they're important at the moment. Rainier, nice pop, still below the roadmap line. Still not looking up yet. That's the resistance right there. The resistance is right there. May continue lower, although we did touch right there. If we break above, let's go up. Target up here. That's a measured bounce. Need this stuff to prove it. I need a move up above about 125 to tell me we're going up to 200. Toyota Motors. This one did a measured bounce potential also. It's on a log scale. Now, you know, like Chris, I finally figured it out. I don't know if you heard me say this. Chris H, talking to you. You asked me, how do you know, or why do some charts work log mode, some not work log mode? I finally, like, sitting here doing all this coding, making all these new tools, and it, like, light bulb, I figured it out. Why do some charts look better on log mode and some charts look better not log mode? It depends on the programmers programming the algorithms, all right? If the particular programmer, or, you know, the group of programmers programming the algorithms for a particular ticker liked log mode better and programmed that into their algorithm, it's going to respect log mode. If they didn't use log mode when they program their algorithms, those algorithms are not going to respect log mode. They're going to be not log mode. I mean, it makes perfect sense once you hear it. Like, the majority of the trades are algorithmic. If those algorithms are majority log mode, it's going to be log mode is the fib levels that are going to be respected. If it's the majority of the algorithms are not log mode, it's not going to be log mode. And that, I mean, it just, like, you know, Goose, that may light bulb for you too. Like, why the different modes? And you never know which one's which until you check them and you see which levels it's working on. So there's another QQQ. There's a triple threat right there. 1 minute chart. Firing off. Dun-dun-dun, dun-dun-dun. One on SPY too. One on Microsoft. Looks spicy this morning. Spicy. Anyway. All right. Have a good day, Kay. The recording will be here when you get back. Alrighty. And we got 9:55 coming up. So that's why log mode, not log mode. Toyota looks pretty good on log mode, and that puts the targets way up there. Way the freak up there. Potential. But we're still below the roadmap line. We need that to break above all those gap downs, above the roadmap line, and then we can see a large upside. ADXN. Biotech, pharma, nothing. That looks like an dumpster fire. In fact, it has all the makings. Reverse split, big down, nasty chart. Bluck. I say bluck. Anyway, TCOM. Right here. Potential resistance. Trip.com. So we've got this high up here, this low down here. Looking for this break above this resistance right there to go higher. 61. SLNO. Nothing at all. Cold. There's not many tickers on the list either. Cold. This is ultra short. That means leverage short natural gas. NG1 exclamation points. Oh, took another dip right into support. So here's the level to watch right here on natural gas. Watch that low. We start breaking it, probably coming down here. If not, cruising lower, back down to $1.30. If we can, man, we rejected that roadmap line. Look at that. Here's the first downside target, right? Just lower low, 183, 178. So that's the zone to watch. We break down below that right there. That 786, probably going cruising down right there. If we turn right there, it may break out the breakout level to watch. The roadmap line right in there. That could go cruising right up to the targets up here. Alrighty. Dun, 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 dun. GLPG. So the list is everything that was moving $2 or more pre-market. And if you got requests, remember 5 p.m. tonight, I do requests for like an hour. I call it 30 minutes of awesome. I used to do 30 minutes. Now it's like an hour because, hey, I'm more popular. And that looks like a nasty chart. That's resistance. And if we could break through, we've got lots of highs up here. We're going to have to go break through to go higher. This is biotech for you. Biotech is dangerous. Doesn't always follow patterns. NetEase is potentially working on the low here. Could be a measured bounce already. Could. May push just a little lower. I don't know. It's like such a coin flip between the two algorithms there. Like log mode, not log mode. Log mode, not log mode. I don't know. Kava getting whacked. That went exponential. And I would kind of expect a retrace back down here. Kind of. At the minimum, I would kind of expect something back. Just a gap fill even, right? Right back down like that. Right back down here. So watch out for that. Right there. That's off our... When was that, yesterday? Thursday? No, that was last week. Last week earnings. SMCI continuing the decline. Watch out for that. Still watching for that to retrace. Now, SMCI, why? If you're new here, you're like, well, why do you expect downside? Check this out right here. Let's see. Where is it? Where is it? Where's my chart? Right here. Look at this. This is a very common, like, why is this not labeled what this is? Because it occurs over and over and over, right? We see this up here. You see people like, I'm a genius. I'm going to tell everybody to get involved in this. I'm going to tell people to buy more. And then you pull back, you get this consolidation. Well, we just need to cool off for a little bit. We're going to get the next rally. I heard this on SMCI. People are like, oh, yeah, now's the great time to get in. It's pulled back off the high until it starts this leg right here. And then people get angry. I mean, you get people like, I got to get out. Panic, denial. All right. You get depression about it. I'm going to quit trading. Everything sucks. I see this over and over every time we get one of these bubbles. This thing did that. Got the pullback. People are like, we just need to cool it off. SMCI can go again. Now we're heading down. Getting a little rally, but we may head right back down. Like that. It's the classic pattern. Like that. It's a classic bubble pattern. We see it all the time. Now, the one that's scary, though, could be setting up on this one also. Remember AI hype, right? NVIDIA, SMCI, people said you can be a genius. Just go buy those. Be careful. All right. Permacautious. Permacautious. CRM. Dun-dun-dun, dun-dun-dun. But that one could break out and go. We could be looking at 334 possibly on the upside. Need to break the resistance right up there. This is the first sign. If we get above there, above that 270 area, that's the first sign. Next confirmation above 290. Probably going up to 334 on CRM. MSTR getting whacked a little bit with Bitcoin. The sympathy. We may return to the roadmap line one more time. Did not break above the 618. Did not confirm the entry right there. HEI. Excuse me. Gravel. That looks like it may come back down to the roadmap line. Hershey's just sideways. We're just consolidating in the bottom after this large move down, consolidating. We may need one more flush. One more flush. 160, 170. And then we then we could potentially make the bottom here. Golly. It's just like a little piece of limb for better word. Coin rejecting the roadmap line so far. We may do a 618 retrace here. We may, which is not very much. I mean, it's only back down to 185. Then we set up the potential move up to actually break above the 618 for the bigger retrace here. Get the confirmation that we're going on higher. 302, 317, possibly the breakout to 360. Possibly. NVO. Looks like it wants to come back, and so it stopped at the resistance. Has that gap down. I warned that the gap down would probably be resistance. We hit it, retraced, hit it again, retraced. Till we can work our way through it. It may get a bigger downside move. That bigger downside move could, in fact, take us down there. Be careful, be careful, be careful, be careful. Perma cautious. We did not confirm the breakout. 152 on the breakout. 109 on the downside support. NVIDIA, this one, remember, NVIDIA has earnings coming up. This one may retrace to the roadmap line. And there you go. It may do that. Oop. We respected the downtrend line so far. USD, respected the 618 so far. Support at the roadmap line. Target at 183. BMO, rejected the roadmap line. I mean, these patterns work both ways. And the downside target could be down here at 75. Gosh, a bearish potential. Oh my goodness. DPST did confirm we're probably going up here, but it may retrace before we get up there. Bonus trade, MS, right here. Look at this beautiful, beautiful trade. That right there. Oh my gosh, a bullish trade. Are you kidding me? I must have my bearish blinders on. It really bugs me if somebody call me perma bear, if you can't tell. Anyway, statistics for this one. Look at this right here. We have new potential entry was today. Target 117.11 or 111.74. Stop 89.94. Potential upside about $9. 84.85% of the time we've won. 3.29. That means that's like 230%. The winners are 230% bigger than the losers right there. 33 trades since 1993. Pretty reliable. 27 trading days on average for the length. How long does that put us? Use this handy dandy tool here. The entry today, 27 trading days. The average would be right there. Is the average? Could it be longer? Absolutely. Could be 3 times longer. Could be out to December, January, February. Could be 5 times longer. All right. The shortest trade and the longest trade. Shortest trade could be a day, and longest trade could be who knows. Now, how could you find that out? Well, if you had JT's tool and you could dig in here and look at the summary of trades, you could actually kind of find this out by looking at how long they lasted, although it doesn't tell me how long they last exactly. But there's all the trades from that data, and that only went back to 94. There we go. That's all of them. Dun-dun-dun, dun-dun-dun. So can I get all the information? Yeah, I can. It's possible. Yeah, that one's took about a month. Took about 2 days. So there's a fast one right there. 3 days. There's another fast one, 7 days. Another fast one, 7 days. Another fast one. So sometimes they go fast, sometimes they take a while. That one took 2 months right there. There you go. That's how that all works. And couple people have been like, where could I get that tool? Well, I don't sell it. You can write your own. Probably won't work quite the way mine works. I've got some proprietary stuff in there, and it kind of powers a lot of my systems, so it's not for sale. It's too valuable for me to give away for any price right now. If you got millions of dollars, we can talk. You can just contact me on the side. Anyway, Sony's off to the races. Cool. So Morgan Stanley potential right there. Now my bias for the day. Thanks for hanging with me. Remember, 5 p.m. Come back and see me. Make sure you set an alarm in your phone. Give me a like on the video if I said anything that was helpful, beneficial. We could wrap this baby up. This correction does not have to go down to those support levels. This is like a bullish potential setup, and we did all the confirmation stuff. So my bias is still up. Potentially 5750, possibly 5800 on the futures right here. I'm biased up, cautious for the pullback. If we do, I'm probably going to add more longs to chase the upside breakout right there. All right. There you go. That's the long and the short of it today. Short of it down here, long of it way up here. The upside looks better than the downside at this point. Like, we may have a little downside risk to a potential upside breakout, but then watch out, because we could enact a larger time frame, bigger downside. So short term, looking bullish right there. Hope what I said was beneficial. Remember, 5 p.m., come back and see me. It takes you making requests to make the show at 5 p.m. If you don't come, I don't have requests. So have a great day, everybody.